Welcome to LifeCash. LifeCash is an intuitive financial planning app. LifeCash has been designed to help you plan your client's desired lifestyle by giving you an app which you can use to help them plan their financial future. Lifetime cash flow is made easy to understand and implement. When you open up the app, you will see 4 options: working employed, self-employed, company director, and retired. The 3 working apps take account of the tax treatment for each given working scenario. The final app is the retired app, which allows detailed planning to be done around drawdown and estate planning. We will start by looking at an example with the working employed app. Tap to open up the app. The main screen shows a series of tanks and taps which contain water. Water flow is used to simulate cash flow. The tank in the top left-hand corner is the income tank. The income tank feeds the asset tank. Out of the asset tank, the retirement income is produced. To start the process, you begin by setting up the client's profile. Tap the Edit Profile button. A slider now appears so you can set your client's current age and their desired retirement age. Enter their numbers, tap OK, then tap Submit. Now move down to set up the agreed assumptions for long-term investment returns. Remember, the returns need to be set net of charges. Now, you need to move down and edit the inflation field. Here, you set the agreed assumption for long-term inflation over the life of the client's plan. The inflation assumption is critical, as inflation will have a major impact on the client's future spending power. When you've built the plan, try moving the inflation assumption up and down to see what effect it has on your client's plan. With the client's profile set, you now need to move over to the income tank in the top left of the screen. Enter the gross annual income for the main earner on the left-hand side, the second earner on the right-hand side. As you will see, the app automatically works out the tax and national insurance for each client and gives you the total net disposable income in the income tank on the main screen. From here, move down to the costs of living. This is the client's annual expenditure which regularly leaks from their income tank. When you open the slider, you will see 2 columns, working and retired. Enter the current living costs in the working column. It is important that you account for everything. At the side of the calculator, we have provided a simple checklist for you to follow. As you enter your client's numbers in the working column, you will see the expenditure is automatically populated into the retired column in today's money. Now you can edit the retirement expenditure in today's money to take account of the lifestyle your clients are seeking in their retirement, removing things like school fees and maybe adding some extra expenditure to holidays, for instance. At the bottom of the slider, you have now hopefully established what income they have as a surplus, which can be utilized in your client's pension, savings and investments for their retirement planning. Let's move over to the center of the main screen. Enter the current value of your client's existing pension and investments. This is the value of all their investments, but not their main residence, as this is unlikely to provide an income in retirement, just a roof over their head. You will see the app automatically works out the future value of their investments, based on the investment assumptions you set, multiplied by the number of years until retirement. In the bottom right of the main screen, you will now see a projected retirement income. This is a projection of what income your client's existing assets will produce at the point of retirement. You can now compare the projected retirement income with the retirement sum required in the bottom left of the screen. This is the annual sum they will need in tomorrow's money at the point of retirement to meet their chosen lifestyle. You will now immediately see whether there is a shortfall in your client's plan. If they have a shortfall at this point, it is important to use the surplus income available to put into regular annual savings, pensions, or investments. To do this, open Edit New Investments. Enter the net annual amount they will put into their pensions, savings, and investments. This is the amount the client has chosen to put in each and every year until the year of retirement. With the pension contributions, you will see these are automatically grossed up by the app, with any higher rate taxes rebated to show an increase in disposable income going forward. From here, you can save the plan by tapping the Save key and reload a plan by tapping the Load key. Storage is performed on the device and also backed up in the cloud. Many different what-if scenarios can be built this way. Should you wish to use the data in part of a report or suitability letter, you can email the data to yourself, your PA, or paraplanner. Remember, this is not a one-off exercise. It is important that you go back and revisit your client's plan at each review meeting, making adjustments as necessary. We hope you enjoy using LifeCash with your clients. If you do, don't forget to tell your friends and associates.